Okay, this is a different way to look at that Bessemer data. The last 3 years, put your money in Nasdaq, you're up 24%. What happened if you put your money in cloud stocks and SaaS stocks? Down 44%, right? Now it's a little better if you do 2 years and a little better, but just look at it. So it is really, so this means no matter what's happening with any individual company, we're going, and I wrote this up again on SaaStr, I think over the weekend, we're in the 3rd year of a downturn in venture. It's a weird downturn. There are still unicorns, there are still great companies, but in the aggregate, as you can see, we're in the 3rd year of a venture downturn. So be aware of it. It's a fact. It just is. And it should be harder to raise money. And it should be harder for an A than a seed and a B than an A. And it's because of this. Like right now in the aggregate, it's a crummy investment. Doesn't mean you're a crummy investment. Doesn't mean any of you are individually, but you're flushing your money down the drain if you try to invest in just all the good ones. The good ones aren't good enough. You've got to be great. So it's tough. And here's a little bit more signs. And so because of this, 1 year is no big deal in venture. Like everything fell off the cliff in the public markets in 22. Like literally like HashiCorp was the last IPO of the last era. It went public, I think, in December of 2021, and then everyone just stopped going public until Klaviyo, 6 or 8 months ago. It was a 2-year gap, but it took a while. People thought maybe it would be a short downturn in the market. SaaS companies were still growing good. It's been a while, and if you look at this chart on the left, this is IRR, or the internal rate of returns for venture funds. How do they calculate their returns? And usually they're a derivative of Nasdaq.